You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody. That rockin' music means it's time once again for a little program we like to call around here the Option Block. I know it's my favorite. Hopefully it's your favorite bi-weekly source for all things options related. My name is Mark Longo, coming to you from the Options Insider Studios here in still mildly temperate Chicago here, the options capital of the world. And of course, we produce a lot of great content over here in the old studios. 13 different programs, if you count them all up, even though not all of them are firing off all the time there. And where can you find all of that great options-related content? Well, of course, the best place is our flagship portal, a.k.a. theoptionsinsider.com. All of that great radio goodness is up there for you to download and stream till your heart's content. Of course, breaking news from ye old options market, a little bit of analysis, a little bit of education, a little bit of unusual activity, sprinkle it all together with a little bit of future stuff up there, a little bit of other fun stuff creeping in there as well. You never know what you're going to find up there on any given day, so surf on over, check it out for yourself and see what you're going to find. And of course, if you want to mainline that options content, that audio straight into your earlobes, well then iTunes, TuneIn, and Stitcher, probably the best places for you to go. Or just grab our mobile app, available in all the major platforms except Windows Mobile. Only one we're really missing out there. But pretty much all the other major platforms, we got you covered. And all that contact info, the social media, the email, all that stuff, it's all baked into the mobile app. So you guys can use it and ask away till your heart's content, your questions, your comments, your insights, your snide remarks. We read them all, even if we don't answer them all here on the old program. All right, and joining me on said program, starting off, let's go in order of proximity. This episode, so we're going to start off at a sleepy little hamlet. You may just drive by it, think nothing's going on really much over there at all, but nay, you would be wrong, you would be incorrect. It is an options mecca unto itself, because there is one options trader out there. He is known far and wide as Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, you options mecca of one, you, sir.
Broadcasting live from far and wide.
Yes, or at least far.
One of the two.
I don't know how wide St. Charles is, but it's far from here, so we'll put it in that category as we move on to our other contributor, who is indeed much farther in the hinterlands, some may even say, where he is also an options mecca unto himself. Not a lot of options action going on over there on the coast of Maine. They're too busy rock lobstering and ice rink building and clay potting and all the other fun stuff they do, or they're clamming, all the other fun stuff they do over there, out there in the hinterlands. But he's kind enough to take a break from all of that manual labor to join us here on the old program. He is the rock lobster himself, and I'm sure listeners, he's about to take some umbrage. So, Mr. Rock Lobster, have at it.
I wasn't catching anything for umbrage. I was looking for umbrage, but I didn't really hear any.
That's surprising. Usually, I open my mouth, there's umbrage.
Chill. That's Longo. He's just always trying to stir the pot, isn't he?
That's why I sit in the big chair. In addition to hosting and all the other things I have to do, I have to do a little stirring every now and then just to keep the show flowing. The job of a good host. Sometimes you throw a bomb in the room and let it walk away and see what happens. All right, speaking of throwing bombs, let's do it. Without further ado, it's time to dive right on into the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking in the old market today. And of course, when I was referring to bombs, listeners, I was referring, of course, to how the show can sometimes bomb on occasion, and not, of course, to the horrible events that unfolded this weekend in Paris. And it seems like the market didn't really pay too much heed to them either. Of course, it's always somewhat difficult to kind of put these things, these terrible human tragedies, into economic terms, and yet that's what the market attempts to do. And they apparently, after taking a little bit of weight there in the morning and opening fairly substantially lower, at least from where we are now, we saw essentially moving into rally ho mode as the day went on, with the S&P closing right around 2050, so up over 20 handles from its low on the day. Actually, nearly 30 handles now. So just a substantial rally here, up about 1.5% or nearly 1.5% out there in the S&P. The Qs, of course, up about a little over 1%, 1.3%. Of the Dow up a similar percentage as well. So in spite of all the terrible headlines and, of course, the escalation of the conflict in the Middle East as a result, we're seeing the market really seeing this as a bit of a one-and-done event. Read into that what you will, but still a lot of interesting stuff to dive into here on the old street today. I think we'll start in order of proximity again to that sleepy hamlet. Uncle Mike, what caught your eye in today's activity, sir?
I think a lot of what's been going on has to do with the cowardly acts that happened in Paris over the weekend. In that, yes, it did happen after market hours, but one thing that I did notice is that we did have a lot of bearish trading in the aftermarket on SPY. I believe it lost about $2 between 3 o'clock and 5 o'clock on Friday afternoon. And this over the weekend, you never know what's going to happen when something like this happens. I know a lot of times there is always the knee-jerk reaction to the downside, then markets recover when the U.S. steps in, and that seems to be how history has dictated these types of events, or the market reaction to these types of events. But last night, on Sunday night, futures were only down about 10 points in the S&P. So they were down 20 for a little bit, but they were down 10 most of the night. And buyers came in overnight, and I think it just goes to show that over time, the cowardly terrorists can win for a short amount of time, but in time, it's just they're not going to win, and they're not going to break down the world like they want to.
It does make you wonder, of course, the deep-rooted cynic in me. These guys always go for maximum effect, and cowards, as they certainly are, when you see them doing what they did in Paris, of course, they timed their attacks to maximize the body count, but it may make you wonder for future attacks if they'll try to do it during market hours, like you said, to try to maximize the other impacts that could reverberate throughout the world, because when it happens during market hours, we know we're going to see an aggressive sell-off, and the event is still unfolding then, whereas this time they did it going into the weekend. And you mentioned there was some sell-off in the after hours, but certainly nowhere near the amount of panic you would have seen if the market was open and while the events were unfolding as the market was open. So you hope that they don't learn from this and decide to not only amplify their future attacks, but do it at some time where they could maximize the international and economic impact as well, because these guys, if nothing, are always looking for ways to amplify the atrocities that they look to commit. Let's turn our attention away from such horrors and to the land of Maine, where things are always pleasant and tranquil. Mr. Rock Lobster, what caught your eye in today's activity, sir?
How fast, last week, it was kind of the theme was market volatility, and I think we discussed it on Vol Views, seemed to really rise a lot faster than the market was declining. It was almost like, like 4 or 5 straight down days. Everybody was starting to get worried that this, like on Sanford and Son, this is a big one coming, and then it didn't quite, happen. And then obviously you had like the bad events on Friday. Stock sold off a little bit, actually a lot in the after hours. Everything's down like 1%. All the vol products had bounced. And then today, no follow through, the market was flat. Everybody looks around, and I think at this point, and we're banding this about in our chat room, it seems like, the price of oil really is kind of the latest, worry, that $40 level, because it just drags down oil stocks. That's, a big part of the Russell, big part of the S&P 500. It's 10%. And, it's a lot of jobs and everything else in the country. So, they're pumping too much oil. The price keeps going down. It's not great. So I think it feels like with besides whatever the Fed's going to say in December, the market for volatility seems to be, and I think it's going to kind of stay this way. It's real volatile, meaning, those futures are getting bid up and they rip fast. And when nothing happens, they sell off fast. So it's a very volatile market for volatility. Let's put it that way.
But yeah, I concur, Mr. Rock Lobster. We discussed it on Vol Views many times. If you want our deep thoughts on all things volatility and term structure, et cetera, I encourage you listeners to check out Volatility Views. But like I said on that show last time, it does seem like the volatility traders out there, for whatever reason, seem to be much more in that binomial, they got to have it, oh, they can't touch it, they got to have it, they can't touch it type of mindset. You don't see that in a lot of the other equity options or even the big index products, some of the other things you see out there, commodities, et cetera. They seem to be much longer term trends, whereas in the volatility space, it's poison one day and then you have to have it all the next. There's very little in between there, which I think is always fascinated me about that marketplace. It kind of exists to that degree nowhere else, unless you've seen some odd other marketplace, maybe somewhere in Guam that I'm not familiar with, Mr. Rock Lobster. But still, yeah, it's an interesting one. Speaking of interesting pieces, let's move on to something that was going on in the interwebs this weekend. Of course, our friends over there at Barron's put out their striking price and other articles all the time. They had a big piece recently and over the weekend about Yahoo, one of the names we haven't talked about in a while. Kind of been in a bit of the dumps of late. Well, kind of been vacillating of late, but longer term, ever since their new CEO took over, hasn't really been the growth story a lot of people were hoping for. This thing seemed to have bottomed out recently around $28 back in the end of September or so. Now closing today right around $33, up about $5 since then, and a bit of a rally since earnings, and then kind of coming off again. So it's kind of been stuck in this trough of late, but over the longer term, the trend has definitely been to the downside. And looking here, these guys coming out with a little bit of a contrarian pick on good old Yahoo today. This name, of course, doing decent volume, doing about 41,000 contracts. Not surpassing their ADV, but still doing pretty well. And a lot of that, 4-to-1 calls over puts, about 33,000 calls, only 8,000 puts, which kind of falls in line with what they were recommending out there in Yahoo this weekend. They were coming in saying, buy the APE 33 call for about $375, and saying if you get that nice little pop in their example, up to $40, call, surprise, surprise, worth $7. Not a bad example. If you're going to show some theoretical examples, might as well show your trade doubling, right? But I looked today. I always like to follow up on these things just to see what the retail masses, or indeed the large institutional public or traders out there, are doing. And it didn't seem like there was a lot of love for this trade until later on. Not a lot of people flocking in to gobble up some APE 33s, although we did see later on in the day a 2,000 lot of the APE 35s going up paper buying, which I thought was kind of interesting, but it turns out that was a spread. So they're actually legging into the Jan 2017, next year, 35 call spread, paying $1.70 for that one. So maybe an institutional reader listening to that saying, I like that trade, but perhaps doing a little bit different selling longer term, selling the Jan and then buying the April. Couple strikes higher. Mr. Rock Lobster, did you see these write-ups in Yahoo? And have you been paying attention to this name at all? Is this one that's been lighting it up in your chat room of late? Perhaps, who knows, maybe with some upside love strategies lighting it up, or do you take a dim view of this one?
No, we don't have a dim view. We had a little of some upside strategy love, mostly just selling put spreads, nothing more of a play on BABA. Yahoo's been kind of a perennial sort of take over, take out. I mean, I think you just buy Yahoo and you get all the Alibaba and Yahoo Japan for free. You buy that, you pay for that, but you get Yahoo for free. So it's kind of a, it's been one of those. those type of stocks. So I didn't really see that volume going up. I don't know how I missed it, but it does happen. I do miss volume sometimes.
Even you and your myriad topographical maps of the market can miss something, sir.
It does happen. But well, yeah, it looks like some interest in it. That's for sure.
All right, and since we're talking what's going on out there in Barron's, they're also sending some love out to good old Bank of America. This one closing right about 17.5 today, up about 1% in keeping with the market today. And they were lighting it up, at least from a Feb call perspective, and that's where Barron's was directing their bullish love. This time, seeming to get a little bit bigger response out there. They were recommending buying the Feb 18s for 68 cents. They went out today, 64 at 66 cents, so coming off a little bit. Of course, there was some heavy volume on that strike, nearly 6,000 contracts today. So this one clearly resonating with a few more people out there. Of course, as the end of the day close will show you that there were about as many sellers as there were out there buyers as well. So people may be arguing against taking the contrarian view of Barron's contrarian viewpoint in and of themselves, but still always kind of fun to see how some of these bigger columns play themselves out in the marketplace. If you came in and bought their exact recommendation, 68 cents, you're wearing it a little bit today, but not too bad. You still only got about 4 cents against you. So I would deem that in the normal rate of slippage for a call like this, particularly when people are coming in and hitting the bid at the same time you're trying to buy these things. Mr. Uncle Mike, you pay attention to any of these at all? And what's your take on good old Bank of America these days? This one fascinating you? Is this going to go in the strategic night portfolio?
Not that I'm aware of. I owned Bank of America many, many years ago, and what I do like about it right now is that they have started paying a dividend again, and I'll never forget it. I remember just seeing them guarantee in 2008, we will never stop paying our dividend, and then a few days later, it seemed they stopped paying their dividend, but they're back to paying it right now, and it's still nothing near what it once was, but it's one thing to where it's a company that survived, but it's still nothing to where it was at any point. I don't know if I'm necessarily uberly bullish on it, but it might be something to take a look at should we actually start raising interest rates.
We profiled that you risk reversal in UA like last week before the jobs number. Somebody paid it was a near term risk reversal, bought calls. I think it was the 17.5 calls, sold the 17 puts for 9-cent credit. And by Friday afternoon, they were selling it for 50 cents. And they did it 10,000 times.
Well, yeah, there we go. 10,000 times. There are definitely worse ones to do. Sometimes I got the feeling, Mr. Rocklopster, we should just kind of do a whole episode of just catching up on our option block, or odd block, I should say, trades, because there's so many to follow up with. Sometimes we have new ones to talk about all the time, but sometimes you want to go back and look at the old ones sometimes too, because so many, not just our friend out there in Men's Warehouse who was lighting it up, but a lot of other ones lighting it up and losing a ton too. And so sometimes it's fun. Maybe we'll have to do a look back every now and then just to see some of the more exciting ones. I know people like to write in all the time, hey, what about this one you profile? What about that one? And we keep an eye on a lot of them. We don't bring them back on the show all the time, but still, it's a lot worthy of note out there. And perhaps as we're adding new programs to the network all the time, maybe we'll add some sort of look back type feature to you guys. Maybe let us know if you'd be interested in something like that, because it's kind of an interesting one, certainly for us. And since we're talking about UA anyway, let's dive right into it. Let's get on with the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, welcome to the Odd Block. Like I was just saying earlier, this is indeed the portion of the program where we break down what's moving, what's shaking, what's rocking, what's rolling in the old market. But this time we break it down from an options perspective, and we dive a little deeper into, some may say, the more dubious side of the option space, some well-timed and oftentimes some ill-timed trades that are going up for some size today. We're going to kick things off out here in the realm of a name that we haven't talked about in a while. This is TJX Companies. I believe these are the owners, proprietors of a TJ Maxx and all those assorted other brands. They do a lot of other fun stuff and have a lot of different companies under that TJX umbrella. Closing today, $65.65, up about $1.50 or over 2% today. So a decent rally today. Of course, they're coming out tomorrow with earnings before the open, so today's rally may have been a little bit of some pre-earnings love for the name. Certainly from an options perspective, they were lighting it up, to use the technical term. This is the name that does about 2,900 contracts a day, doing 29,000, 10x that today. So really lighting it up. And what caught our eye out here wasn't so much straight up earnings paper where, you're coming in and buying a daily call ahead of the earnings or something a little bit crazy like that. It was a little bit longer term, all the way out to Jan, which in the earnings cycle is forever. To the Jan 60 puts, that's what caught our eye out here today. Looks like someone drawn a bit of a line in the sand here on TJX, saying the 60 handle this far, no further, and they're picking up about $1.90 to do it. The first lot went up 4,200 and change. Paper selling, like I said, for $1.90 over there on the ISC. Again, straight up put sale. Didn't see any stock in that area. It looks like a total about another 2,000 and change went up, a total of 6,600 on the day on that strike, all on open interest, of about 1,300 contracts. So clearly opening paper out here. So we got our friend out here again drawing the line in TJX out here at the 60 handle. And looking at the chart out here, that's not the, if you're going to pick a level, there are certainly worse levels that you could pick going back about a year or so. This thing has been mostly north of the 60 handle. In fact, except for a little blip back in November last year when it briefly dipped through the 60 handle around earnings time, it's pretty much never really looked back at that level. So our friend here is clearly saying, you know what, that's a pretty safe level, at least from a near-term historical perspective. And it gets below there to the tune of about $58. I'm going to buy me some TJX. Mr. Rock Lobster, what's your take here? Do you concur with our friend and his aggressive drawing of the line in the sand, or do you think he could have picked a better level?
The only thing, I mean, he's going to get the year lows with it. So that's not bad. I mean, he's up money now, but I'm just waiting for the retail earnings to start to come out, because that could be a whole lot of egg on your face. But they could be right. They could be right, but at least they're picking the year lows for it.
Yeah, like I said, there are definitely worse levels. He could have writ the 65 if he was really being crazy aggressive. He decided, looking back, it's a pretty understandable level. When he picks up the stock around $58, I don't think, at least in the near term, he's going to be too upset about that, unless, of course, this thing just goes on a rocket ship to the downside after the earnings tomorrow, in which case he may be wearing it. But again, as we say here on the show, always better to write that put than just work that stock order, and then you get nothing for all the risk you're putting out there. And as we've seen many times back in August, the most recent example, just working a simple stock order is risk. You might as well get paid for it. And our friend here getting about $2. Moving on to another name we've discussed quite a bit of late, and this one perhaps a bit of a cautionary tale. This comes to us via our friends over there at Lions Gate Entertainment, ticker symbol LGF, closing today right around 37.5. One of the more active from an options perspective, at least from a UA perspective, of the studio-oriented names out there. You guys are always writing in asking, how do you play some of the big movie releases? Well, Lionsgate seems to be a fairly active, fairly popular one of late. This name's been doing about 2,000 contracts a day, which from an options perspective and from an odd block perspective certainly isn't bad. Not bad paper. We profile a lot of names here doing a couple hundred contracts a day, if that. So 2,000, not bad. Certainly from a studio perspective, that's not bad options paper at all. Today doing about 5,200, so about 3x that or close to it out here in the old LGF today. And what caught our eye was a little bit closer to home paper, and this one was the no 40s going up. Looks like paper selling for a dime. And if you're paying attention to some of what we were looking at in recent days, you'll know this looks like this is probably closing because we got about 3,300 contracts open, and it looks like, again, how to give up 30 cents about 3,000 times in 24 hours. This is a good example of that. We don't need to look back too far, go back to Profile Recent Show, because it just happened yesterday. Someone coming in to gobble up 3,000 of these for 40 cents. Now it seems like one day later, they have indeed given up the ghost and are dumping them aggressively to the tune of 10 cents. So what a difference a day makes, Mr. Rock Lobster. We didn't see any stock going up with these either in the initial contracts or today, so it seems like they were what it appeared to be on the surface, just someone taking a swing for the old fences, a pretty aggressive swing, and then deciding, as it so often does when those upside calls don't move your way, in this case, in a day, giving it up before he loses what's left of that 40 cents. Mr. Rock Lobster, a lot of cautionary tales in here. What's your favorite?
I don't know. I remember looking at these on Friday. What's funny is they dumped these calls. Obviously, somebody bought them back for a dime, and there's a little bid for like the 39s and 38s. What will be funny is if the stock actually does something strange in a couple of days, and Mr. or Mrs. 40 strike was right. They just bailed too early. So if you pay 40 for something, I mean, I guess if you sell 3,000 contracts, you want to pick up that extra dime because that's real money on 3,000 lot. But still, I don't know. I don't know why you would pay 40 for it and sell it for a dime a day later. It just doesn't make any sense to me. But heck, it wasn't my money, so what do I care?
Yeah, it'd be funny for us. Not so funny for our friend here. This thing turned around and went rally ho mode over the course of this week. There probably will be a few tears shed. And I should mention we're talking trading days. It wasn't actually 24 hours. It was this Friday, of course, so a weekend ago, an eternity in the lifespan of the market. And of course, at that time, LGF was trading right around the 40 handle, got a little bit higher and almost up to 40 half before closing around 37.80 or so. So the 40 handle was not as out of the realm of possibility as it was today. Of course, our friend clearly thinking this was a short-term oversold situation and he was going to make his money back and then some when this name exploded back to the 40 handle. And apparently a trading day later, he's not as convinced that his salvation is nigh, and so he's giving up the ghost. As we move into ever more optimistic paper on the retail front here, going back to Burlington Stores. I remember the last time we talked about these ones. It's probably been a while if we have indeed included them on the old odd block. This is the name. Closing today, $41 and about 30 cents, up about 1%. Ticker symbol, of course, BURL, B-U-R-L. This one does, about 2,200 contracts a day, doing over 9,000 today. And what caught our eye was, yet again, some near-term aggressive opening. Looks like paper here in the Nov 41 calls. Paper coming in, gobbling up 2,500 times for about 75 cents. As the day went on, we also saw about 3,000 of the Nov 42s going up. So it is possible they did legged into the spread. No appreciable open interest on either of these strikes. So this is clearly opening paper. We did see some stock going up, about 85,000 shares going up with this. So they likely bought the calls and then dumped some stock. This one is near term, like we said, so they have earnings coming out, but this one goes out before earnings. So our friend here playing a bit of a risky game, looking to get his pop prior to the earnings, or indeed he needs a big move at this point. At this point, direction almost notwithstanding, he needs this thing to rock and roll and do it quickly before these calls expire. Perhaps our friend Mr. Rock Lobster taking a little bit of a note from your playbook, trying to get somewhat, I wouldn't say free, but a cheaper swing at the bat because he knows he's not going to pay for all that decay. But in which case, doing it delta neutral may leave you scratching your head a little bit here. What's your take on our final name here, our friend swinging hard for the fences in BURL?
You know, there was more paper too. It looked like there was. It's hard to really exactly, you know, the no 42s then traded for 75 cents. So somebody wants this stuff. I'm not quite sure what the deal is, but somebody paid up for the 41s, and then the 42s traded the same price. Looks like somebody's selling, and again, it went up spread. So somebody is trying to load up on this strike. And what I don't get, okay, and I'm confused. And we did get a bit of a bounce here in the name, but you know, you only got 4 days to go. So earnings are the 24th. So unless they know something, it's a head scratcher. Like something's got to happen pretty soon, or it's just going to rot like crazy. So real confusing trade to me.
Yeah, there was action on a bunch of strikes, the 41, 2500s of the 41s, about 1,000 of the 40s, 42s, 3,000 times. It was all sorts of weird paper going up out here in good old BURL, but it seems like the sentiment was clear. He had to have it, and he had to have a lot of it. So we'll see if this plays off for him as a bit of an interesting choice, structuring it this way, not giving himself a lot of room to run and not even giving himself through earnings. So we'll see how this one works out. Only a few days to play as we keep on rolling with the program right on into the strategery block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. This is indeed the portion of the program. Maybe some of yours favorites out there. You like some strategy? Well, Uncle Mike's got you covered. This is the portion of the show where he grabs that smoking jacket and the bubble pipe and sits down by a nice roaring fire, stone tablets in hand, to dispense some options, wit, and or wisdom, and sometimes a dash, a scotch, if you will, of hilarity. Uncle Mike, a lot afoot in the markets these days, still on the tail end of earnings. We got the Fed looming on the horizon. We got all sorts of horrible macro news hitting us. What's on your docket for us today, sir?
Well, you said sometimes I put in a dash of hilarity, so I think with that I need to start off with telling a joke. What does a fish with no eye sound like?
I have no idea. Someone else who has young children in the house I could see. That's a good one. I like it. I'll have to share that.
It's a good one. It's a good one. So we got the hilarity checked off the list. So let's go forward with wit and wisdom. I want to go through the ways with which I have been trying to stretch deltas as best as I can since October 26th. I want to give a little update on my trades here as to what I've been doing with my SPY strategy, why I've been doing it, when I've been doing it, just to kind of go through things and letting you know how I've been trying to stretch deltas as best as I can. October 26th comes and we are positive on the year again in the S&P. So by my rules, and we were, I believe, the day before. I'd have to look. I'm just looking at the my closed trade spreadsheet right now. But either way, we're at a point to where we're ahead on the year. So I got to get back in and start to be long again. Because that's what my rules dictate. When we're positive, I need to put more deltas on the table. And then when we're negative on the year, that's when I try to become very cautious. So with that, I wanted to kind of dip my toe in the water as best as I could. I didn't want to just jump right in because naturally when that happens, you get to where you're going to a lot of times get burned, at least in my experience. So what I did was I just bought a slightly in the money call. SPY was around 207. I bought the January 205 call and simultaneously sold a 2-week November 210 half call. And the reason that I sold that call so far out was that if the S&P can run up 35 points over the course of the next 2 weeks, I felt that, that's a good problem to have, quite frankly. And it became a good problem to have because on November 2nd, I was forced to roll up my call option. So to give you an idea of the price, I bought the long 205 call for $6.50, sold the short 210 call for 46 cents. So I'm out at a debit of $6.04. As November 2nd happened, I had to take a 70-cent loss on the 210 half call. So by doing that, that actually makes me at a debit, at least at that stage, of $7.20 on the trade. Rolled up to the November week 1 212 call, and I got 44 cents for that. And then as time went by, eventually closed that one out on November 5th for 15 cents for a whopping 29-cent profit. I've been basically bobbing and weaving with trying to sell these calls when the market was around those levels, just maybe 10 to 15 points on the S&P away from being at an all-time high. So as that was happening, I got to the point to where I'm like, if it wants to sit up here, that's fine. I'm going to continue to sell calls against it. But vol was not really there at that stage. But then the market started going down and vol was there. So Andrew had mentioned on the show last week that when you're selling premium, you are taking a bet on volatility. And I'm going to illustrate how this is true with real life, real money here in a moment. It is very true. Because as the markets went down, I eventually started rolling down my calls as the markets went down. So on November 5th, I got into the 212 call, got out of that on November 6th for a 40-cent profit, and then rolled to, and November 6th was a Friday, rolled that to the November week 2 210 half call and got 91 cents for that. Monday, markets went down over the weekend and got out of the November 210 half call for 30 cents. And then on November 12th, which was Thursday, got short, sold the November 208 half call. I got 90 cents for that. November 13th, which was Friday, got out of the 208 half call as markets were continuing to go down for 30 cents, which came out to a 60-cent profit. And on Friday got into the November 206 call for $1. Now, with this entire time, with all the premium that I sold, I had, and this isn't including the long premium, I am down a little bit since I got into it, which I'll talk about in a second in terms of the exact numbers, but the premium itself on those premium sales, which was 1, 2, 3, 4, 5 premium sales, 1 loser, 4 winners, that came out to $1.20 in profit. So with $1.20 in profit, that lowers my theoretical basis on the January 650 call the January 205 call from $6.50 down to $5.30. On Friday, I did sell the November 206 call for $1. Now, this whole time, what I'm trying to focus on is keeping my deltas around the 20 level, just because of the fact that normally if I am a little bit more aggressively bullish in my strategy, I try to stay between maybe 50 to 70 deltas per contract. And when I talk about these deltas, I'm referring to per contract. So as I'm doing this, I've been trying to stay around that level, and I'm trying to stretch the delta as best as I can, which Mark and I had actually talked a little bit about before the show. So what this has enabled me to do is, as the markets come down, by rolling the calls as the markets come down, I've been able to take advantage of increasing volatility in that I'm still able to sell premium on the way down and still able to have that juice, so to speak, as an aid to a sinking call option. Now, with all this being said, markets snapped back up this morning. Not this morning, but today. S&P rallied 30 points, or SPY rallied $3 on it. Now, going into the close, it came real close to where on the roll down that I had on this 206 call, I was almost profitable until the market just went a little bit above it to where it closed at $1.16 today. That's the bid on it. So it's $1.16 by $1.18. So we'll just call it $1.17. And so based upon theta, and let's assume that vol stays the same overnight. Let's just oversimplify this. That specific call option will still be profitable. It's at $1.17 right now, and between Monday and Tuesday, assuming it gets exact perfect theta, which it won't, I understand that, but I'm just trying to make a point here. Based on the theta, even though the market moved up close to 30 points in the S&P close to 20 points in the S&P from where I actually got into this trade, because I got in at around 203.60, 203.70 on Friday, if I recall correctly. This is actually still technically the bearish section of the trade. And what this actually did was, to my benefit, not just based upon time decay, but also based upon a decline in volatility since Friday when I actually put this trade on. So the lesson of the day is that, number one, I want to expand on Andrew's point from last week when he had mentioned that when you sell a call option or when you sell premium of any sort, you're not just taking on a theta and a delta bet, you are also taking on a volatility bet. But number two, try and use it to your advantage in the best possible way. Because right now at this stage, if the market goes down tomorrow, I'm very happy that I have all that 206 call in my pocket, so to speak, the short 206 call in my pocket. But should the market go higher, I have theta on my side tomorrow, and I also have likely implied volatility on my side to help mitigate the delta going against me on this specific call. So with that being said, I am long about 6 deltas right now going overnight. And I'm very comfortable with that because also based upon my rules, we just went positive today based upon the close. And we're only positive by about 10 cents on SPY. So I'm very comfortable with that amount of deltas in my pocket. And I feel very comfortable with having to roll the call or do some type of an adjustment tomorrow should the market go higher. But should the market go lower, the joy of this position right now is the fact that I only have 6 deltas on it. So what I would encourage you to do is really have an understanding of how deltas work and how this can be of benefit to you. And here's the best part. I can do all this in an IRA. And that is the end of the strategy block for today, November 16th, 2015.
So you think, unless they yank out all those rules on IRAs. But thankfully, it doesn't seem like that's going to go that way. They're stepping back from the abyss there, sir. So you can continue to have all of your cake and eat it too in your IRAs. From an options perspective, at least. You want to learn more about that, listeners, check out our advisors option program where we get into a lot of that stuff over there on that show. But for now, we got a little bit of extra time here on the Monday segment, so I want to make sure we give you guys a little bit of love on the show. So without further ado, let's dive into a real quick listener mail.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, like the man said, this is the portion of the show where you guys get to write in or email in or tweet in or Facebook in. No shortage of ways for you guys to post your questions or use our website feedback form like our first friend did here today. He didn't write in specifically to this show. He wrote in actually to our site to discuss some stuff with our site, but I thought it was instructive and informative to include it here on this program, because I know a lot of you guys have similar questions. This comes from Carmine. He writes, "Hi guys, awesome site. Great info." Well, thank you, Carmine. We try. We work hard every day to make the old optionsinsider.com a place you like to go to and you can get some useful information out of. And he writes, "Since I actually think you guys are for real, I have a simple question. I have just put my toes into options. I know I need help in education, but there are so many places that are more interested in taking your money than helping you. So I'm asking you guys, where do you think is a good place to go and learn the simple things at first, such as when, why, and how to use spreads, or maybe not to use them? or to day trade or not. I'm hungry with a small account. I'm asking for your help. Thank you. Hopefully he's hungry to trade and for knowledge and not hungry so he needs to feed himself with his trading account, which would be a dangerous situation to be in. But great question, Carmine. The reason I wanted to talk about this is because your question kind of hits on one of the crux, the reason we really launched Options Insider. Coming up on 9 years ago now is, you're right, the retail space, particularly the education space, is just overloaded with scammers and people trying to hawk you their wares. And we decided very early on, it was a formative decision on our part when we launched Insider, that we weren't going to be those guys. We're going to provide you with quality content on a variety of different platforms. So the website, at the then nascent media of podcasts, we created the first Options podcast in Jan of 2007, and it's since unfolded into this network you see before you today. And we made all of it free from the very beginning for two reasons. A, we wanted you guys to know that you could trust us. We're not out there hawking a bunch of crap at you. And also, B, we wanted to provide you with reliable information. We, of course, partner with a lot of big names in the space who then pay for all this great content you guys get to have for free on a regular basis. And hopefully they provide you with some insightful content as well. So it's been a nice, I think, relationship. And that's why we wanted to set it up from that way from the beginning. So you guys know you can trust us essentially coming in. So when we provide you with a tip or a strategy or analyze something, we're not out there with some ulterior motive. And so we get a lot of questions like this on a regular basis. It's glad to see you're at that point there, Carmine. There are a lot of places you can go to start off completely for free before you even dive your deep end into the waters. Of course, you've already discovered our stuff, so I won't bother plugging our stuff because we have all of our great shows there. Options Boot Camp, Options Playbook Radio comes out every week with Brian and those guys. It gives you a lot of great educational stuff for free every time, as well as all the educational articles we have up there on the site. We started building up that Options FAQ section, then we got a little bit distracted in other projects. I think we should redevote some efforts to building that up again because that's a great resource for you guys as well. And again, no agenda behind it. It's just out there to put options information in your hands. And then in terms of other places that are all completely free and have great agenda-free content, optionseducation.org is the place I always recommend because that's all completely free. And it's kind of focused on a lot of the basic stuff you're talking about here, not just what's a call, what's a put, but what are spreads and some information about where to use them. You can find some of our programming up there as well. That's the Options Industry Council. They're an industry advocacy group, but the only thing they're interested in really is spreading the gospel of options. They have no other hidden agenda other than that. So if you want to learn about options and you don't want to spend any money to do it, that's a great place to start. Of course, the Options Institute, our buddies Russell and over there are all really good as well. They have a bit of an agenda that they want you to get into SPX and VIX, but as long as you're okay with that, that getting in, they have a lot of great free stuff over there as well. And they'll go a little bit deeper down the rabbit hole with a lot of different interesting stuff on term structure and using different products, usually SPX and VIX in different scenarios. So if you're particularly interested in those products and you want to learn a little bit more detailed information, again, completely for free. For the most part, they charge for some stuff. Then by all means, surf on over to there. And of course, don't forget your brokers. Your brokers are usually a great place to start with a lot of basic educational stuff. And again, it's free. So try it out. See if you like it. Don't dive into the deep end of the waters until you're ready, until you're comfortable. Until you're ready, really, you feel you're ready to take that next step. And now that said, when you are ready to take that next step, we do partner with a lot of people that we think are good on that front and who first and foremost won't rip you off. There's a reason I do a show with guys like Andrew and Mark and others over here, and mostly Andrew because he's not crazy. I'm just kidding. We like Mark too, of course, but they won't rip you off. Which is a nice thing to have on a regular basis. And Mr. Rock Lobster, this is obviously your bailiwick, so you obviously want him to come over to Option Pit and get into all your fun stuff. But all that aside, when is your real take? When do you think someone is kind of ready to kind of jump into the more paid educational side of the space, when they're ready to kind of take that next leap? When do you find is the most effective for them? And when do you find, quite frankly, they're the best students for you guys? At what point do you guys really like to engage them?
Personally, it's kind of like trading or teaching like floor traders. You want to get to them before somebody else screws them up. So from that point of view, as early as possible, we do a lot of laddered stuff where anything you learn early, you'll use later. So, we do all the basic type stuff first. And we tend to kind of go heavy into the education part. But that's what I would say on that part is you just start, you basically, we'll put it this way. If you put a trade on and you don't know how it's going to turn out, meaning you can't reasonably understand how the trade is going to price, whether the underlying goes up or down or the or volatility goes up or down, or some of the functions in the model start to change a little bit. If you can't answer that question, like, so nobody knows for certainty if you buy or sell something, if it's going to basically make money for you. If anybody says that to you, you stop listening to them right away. You stop listening to them, they say, I'm going to guarantee you 10,000% on this option trade. And you stop listening to those two people as well. But there is a lot of inexpensive basic education from like the SIBO and the OIC and all that kind of stuff. The problem is they can't really help construct trades based on conditions, which is kind of what you want to learn to do. So a lot of what Tosaw talks about in the strategy block, which is always good, is he's saying, okay, if X happens, I do, Y. Or if Y happens, I'm going to roll this down and I'm going to walk through, and he walks through. So the thing is you have to understand how the options are going to work, and education ultimately is free. I mean, as far as from a trading point of view, putting trades on paper, we do stuff like you can follow along with trade ideas for months and months until you get a little more comfortable with how things go. So, I mean, before you start using your real money, you really need to think hard about how that's going to fit you allocation wise, how much money you want to spend, because ultimately options is an education. From my experience teaching people options, how to trade options for almost 20 years, and as a market maker, professional floor trader myself, you tend to learn from your mistakes and not so great about the things you do right. And mistakes in general with options cost money. So you can learn from somebody else's mistakes, following trade ideas and conditions, or you can try to figure that stuff out yourself. And a lot of our clients, we've had clients that still stay with us for trade ideas and analysis for 5 years since Mark launched the site. So I think that's a good, at least for us, I think that's good. Everybody wants something a little different from an options website as far as education or trade ideas go. If you can start to understand conditions and how that's going to affect your trade, and you actually can understand what Tosaw is saying, then you might want to think about throwing some money down on a trade. But if it's all kind of confusing and pointless, I would wait, because cash is a position.
Yeah, people forget that. And that's a good point about the OIC stuff. You're right. They are kind of, due to their compliance nature of the organization, they're kind of prohibitive from getting into really a lot of specific scenarios. So it's a lot of essentially generic, you buy a call on XYZ kind of stuff. So that's what you're interested in. Again, that's good for your early stages of your learning. And if that's what you're interested in, they certainly have you covered. And some of the other firms can certainly get into a little more of the nuances. And again, paper trading, like Andrew said, is probably definitely the best way to go. And I neglected to mention that at the top. Learn on fake money first. And it's still usually, if it's a good firm, they'll give you real-time quotes and everything, or at least real end-of-day quotes, so you can mark your positions in a realistic expectation, and you can see exactly how these things perform in the real world, and so your expectation of how they're going to play out in the real world will be realistic, which is nice. So yeah, great stuff. We can get into this for quite a while, Carmine. Unfortunately, we have to keep rolling. If you have any more questions, keep writing in. A lot of you out there have similar questions like that. We'd love to help you. We could point you in some good directions as well. Guys like Andrew, of course, we have Dan on our boot camp show, and some of the other ones we work with who we know won't rip you off and can provide different stuff. So if you have a certain level you're looking for, or a certain type of education, you mentioned some examples here, let us know, and we can help point you in the right direction. Now we got to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, we're up against it, so we'll just dive right into it. We'll start with you, Mr. Rock Lobster. What are you watching for the week to come, sir?
Retail earnings, to see if they come through as decent or not decent. That's kind of the end of the earnings season for us. And two, if this volatility can remain at this level. Excuse me. They bid the vol up faster last week. They took a pretty good chunk out of it today. VXX was down over 10%. That's a pretty good sized drop. $2.20 in VXX, which is a long vol product. So let's just see if it can keep going. That's all I can say. Let's see if the vol can keep coming down. In the back of my mind, I still think this Fed thing is going to matter. At some point, the vol will be bid back up again. the Volview show, I was like, I think we're going to be higher. That might have lasted for about 2 seconds this morning before the vol turned around. So the thing is when you're trading at a 20 VIX and the market does not really move, volatility is going to come in. And it looks like whatever was worrying people, again, like you said about those fast vol traders, there's not the volatility of volatility is definitely going to be there, I think, until mid-December. And then it will all die for Christmas, like it does every year.
I think fast is one word. I think schizophrenic, maybe another. Call them what you will. Interesting marketplace, to say the least. Uncle Mike, what's catching your eye for the week to come, sir?
205.54 on SPY. Just curious to see where we're at tomorrow. I think we're at a very key level and that we're pretty much right back where we started at the beginning of the year. So I'm going to be watching these levels very closely, as I would with any levels, but I think it's going to be the market might show its hand possibly a little bit tomorrow to see how we can react to the levels with which we are at right now.
All right, thank you for that, Mr. Rock Lobster, and indeed Uncle Mike. And that music means it's time we have come to an end of another episode of the Option Block. But before we go, as always, let me check back in with each of my cohorts here, my partners in crime, see what they have cooking that may interest you, starting with you, the Rock Lobster, way out in the hinterlands. What's coming down the pike in the land of the pit? Well,
to answer that one question, we have a beginning boot camp in January, and we also have a fixing broken positions. As usual, our classes are for the price of an 8 out of 10 lot. You can get some learning on, and it most likely will save you money in the long term.
There you go, listeners. OptionPit.com to learn more. And Uncle Mike, Tosaw, what's cooking in the land of RCM Wealth Advisors?
Holidays are coming, folks, and if you want to get your financial positions in order before you start drinking too much eggnog, give me a call. IM can be reached at 312-212-3531 or send me an email at mtosaw@rcmfs.com. Also, RCM Wealth Advisors is going to be revamping their website. We're very excited about that. That's coming out in a couple of weeks. And the second edition of my book is going to be coming out in the new year. And I still need to come up with a snappy pricing way that the guys at Option Pit do it. Something like 1/3 of an eighth on, I don't know, I'll figure out something. But stay tuned, folks. Plenty to come.
And I find that book great reading when you've had a little bit too much eggnog. You know, Uncle Mike, settle you right back down, bring you right back to earth. So great stuff. Surf on over to RCM Wealth Advisors to learn more about Uncle Mike and check out that newly revamped website coming soon. Can't wait to check it out. Could do with a bit of a revamp, but then again, every website, it's always a work in progress. You're never actually done. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. Of course, for sending in such great comments, and your insight is always welcome. We love to hear from you guys. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.